Lecture 9, Refining the Research Process. Right? In this lecture, we're going to talk about how to refine the research process. Basically, we have 5 steps in order to refine the research. They are: first, identify the issue or problems to research. Second, collect evidence. Third, evaluate the research results. Fourth, develop a conclusion. And then finally, communicate. The example given in the textbook is GE. We know that General Electric is American multinational conglomerate. It's so big that it operates in many segments. Right? It operates in the power generating, lighting business, aviation, transportation, right? And also it has a GE Capital. One particular problem given in the textbook is GE Insurance, which is a subsidiary of the GE Capital. GE Insurance sold many long-term care service insurance. Right? When the people bought those insurance, when they became old, right? And the insurance company is going to cover for the expenses for their daily life, especially when they need nursing services, something like that. And in most recent years, and people find that the GE's insurance liability has risen so fast that the GE may not have adequate insurance reserve to cover those liabilities. However, GE used so-called non-GAAP measures, trying to hide the gap between its liabilities and its reserve, which is a potential loss for GE. So GE was challenged by investors, it's also investigated by regulators, and we know what happened for GE, right? Stock price plumped. Although they eventually sold, or divested the GE Capitals, sold their insurance subsidiaries, but GE suffered a lot. Around 2018, the accounting rules changed for insurance accountings, and several major changes affected the so-called long-term contract for insurance, long-term insurance contract. For example, previously, all their rate was locked in when the insurance policies was accepted. Now you have to verify those rates, okay, and making them current. Well, this affect a lot. For example, for estimate return rate, and for the discounted rate for future claim, future liabilities. So this is a big change. Right? For example, when the insurance policy was written 20 years ago, and the rate, for example, was 15%, so the expect return, okay, will be 15%, and that's on the revenue side. But on your expense side, your future liability will be discounted by 15%. rate, so your current liability, the present value, will be smaller. Now, we know the rate decreased a lot in recent years. When you recalculate your expected revenues and your present value of your liabilities, or present value of the claims with a low rate, right, things were changed totally. That's one big change. Another change is the previously all the actuarial assumptions was locked. For example, mortalities, right? Many other things was locked when the policy was written. But now the new accounting rule says, okay, we have to make those updated, and make those assumptions checked and updated. So this also affect the value of those long-term insurance contracts. Right? Because of that, in 2018, GE actually added $15 billion to its long-term claim reserve to meet its financial needs. Okay, because the value of their long-term contract has changed because of the accounting changes. Right, that's an example given in the textbook. Right, so let's go through step 1. Identify the issue or problems. Right, part A, we're going to identify problems with a rough guess or an elementary question. Right, for example, a question that immediately jump out from your mind could be, should GE, right, report what's happening in their insurance business separately, right? Separately. So that's a disclosure. Or should GE expect, losses from those long-term care insurance policies, right? They know they will have losses, but based on paper numbers, they may not. But based on with the actual estimates, they should expect losses because of inflation, right? Then part B, analyze the problems. With those preliminary questions in your mind, now you should go out to find out. Basically, first you're gonna read the company's filings, such as their 10K annual report. Right, through SEC's EDGAR database, you can find all their public filings. Right, in addition to the 10K report, you can also find other report as well. Also, in all their public filings, you're going to read a lot of non-financial information. For example, right, the management discussions, right, and the quantitative or qualitative disclosures about companies' risk, right, the legal proceedings, and many other things. Right, you can also check company's website or rely on financial database to learn more about the company. Right, in GE's examples, you should read GE's financial reportings so you can understand how they do the insurance business. You can also read information about the SEC's investigations in their GE's public filings. Alright, so when you have those relevant facts in your mind, you can refine the problems by incorporating additional facts, right, with precise terms. Then we can move to step 2. In step 2, we collect the evidence. Part A, we identify keywords for research, right? When we use database like a checkpoint, right, we can do keyword search, and those the proper keyword can really improve the search efficiency. Next, part B, we locate and examine all relevant authorities. Okay, in this stage, we're going to locate, examine all relevant authorities, starting with the most relevant ones from the keyword search. If a keyword does not help in the search, okay, we need to continue to search carefully and in a careful and systematic way by adding more keyword or change the keyword. Consider a hierarchical structure of authorities. For example, when we search the financial accounting, framework, we always consider the FASB accounting standard codification first, right? For tax research, we always search the code first, and make sure we added the precise references for our authorities, and also consider colorable authorities, for possible references. Those are seemingly irrelevant authorities, but they may be relevant. So we have to be careful to examine those colorable authorities. For example, in the GE examples, several authorities been found. For example, the segment disclosure reporting rules, is very relevant in this case. And also loss contingency rules are also relevant in this case. And part C, review insight for non-authoritative sources. These non-authoritative sources may help us understand, and the relevant primary authorities. These sources could be a survey of the present industry practices, could be information about industries. It's very important to determine how other companies, facing similar circumstances are handling procedures. For example, we can get these from the AICPA's publication. For example, the US GAAP financial statement, the best practices in presentation and disclosure. We talk about that in previous lectures. That's going to give us the best practice, by peer companies. Step 3, analyze the results and identify alternatives. In this step, we need to exercise professional judgment and document why an alternative was not used. The example given in the GE's case is how to identify whether the insurance should be reported as a separate disclosure, according to the segment disclosure reporting rules. Because there are many ways to determine whether a segment should be reported separately, disclosed separately. We have revenue threshold, for example, earning threshold, and asset threshold. So we need to check whether the insurance business should be disclosed separately according to these rules or alternative rules. Then step 4, we develop the conclusion. Right, conclusion is typically a very short statement answering each issue or the problem, right, raised above. The conclusions typically should arise from a well-reasoned analysis, right, with well-supported evidence, also include professional judgment. Typically, the conclusion is often placed after the issue, right? So we raise the issue, then we have the conclusions, then we have our analysis and reasoning part. And the last step is to communicate results. Communication and research results are often sent to client in a brief formal business letter, which should summarize the bottom line results and provide advice to the client. And typically we write a memo to provide the complete analysis. Right? In a memo we list all the facts and issues and it summarizes conclusions. Right? Reference the authorities along with a summary of the relevant parts of the literature. Right? You may send the memo to the client or you can just retain it in the client file because the client just want to know the bottom line results and your advice. Right? So how to remain current in accounting knowledge and skills. So successful accountants spend a lot of time reading, enhancing their technology skills, and the knowledge about their client. And here are a few techniques that can help you remain current in both knowledge and the skills. Now you can use a checklist to maintain a list of the new developments. It could be in business, right, accounting, or in technology, new changes, new technologies, right? Then you're going to think about whether any of these things can affect the client, right? They may not have direct or immediate impact, but in the future, they may have a significant impact in the future, right? So you need to be prepared. Summarizes new authorities. Whenever there's a standard update, right? You're going to summarize its impact. Think about its impact, especially to a client. Do a lot of readings. You're going to read website. You're going to read periodicals, newspapers, like Wall Street journals. Right, or the newsletter from the standard setters. And also need to check the database update. Right, especially any news on companies of interest and their industries. Well, continue to learn new skills. Attend the relevant seminars. For example, when it becomes CPAs, continuing education is also an important way to learn. Right? Professional accounting world evolves, and the next decade could be an age of artificial intelligence, right? Accounting or auditing. So how do we use AI? Right? We're encouraged to use AI, but be aware of the challenges and risks. So we know AI is good, but do not rely on AI completely, right? That's a rule of thumb.